Ladies and gents, welcome back to the channel. Today I'm bringing you my 5 biggest and best investment rules that I follow when I make an investment. Now, over recent weeks we've obviously had the great vaccine news, and that sent the stock market into an upward spiral. It spiked a lot recently, and all of you guys have been asking me how my investments are doing, because as you've seen on my channel, I do invest my money, my student loan, all things like that. So you guys have been really keen to figure out and want to know how my investments are doing. Now, for context, I've been investing for a long time, but since Corona is when I got really deep into it, and I've been investing in travel and tourism throughout this period, dabbling in undervalued tech stocks, and then recently as well building up my long-term portfolio in things like clean energy, robotics and automation, 5G chips and semiconductor companies at what I believe to be a discounted price because of the slump that followed Corona, while also recently getting into trading leverage on a few companies, only small leverage because that is very risky. But I've been building up my portfolio seismically as I've had the funds. Moral of the story, I've been investing a lot recently. And today, as heavily requested, I'm going to be sharing my top 5 investment rules. Now, these are the rules that I follow whenever I make a decision or an investment, but it should be noted that these rules are not a guarantee of making money. I'm not a financial advisor. You may lose all your money. This is simply for documentational purposes and answering some of the questions I've had. Now, my credibility comes from 4 years of experience trading with relative success. I studied 3 years for an economics and finance degree where I did learn certain elements of the stock market, and obviously a lot of it comes from personal research and understanding. Now, since March 2020, the start of coronavirus, to now, my portfolio is up 35%. Now, to some of you that might not sound like a lot, but honestly I think that's a very good return. That includes some companies going up 120%, some going up 5%, but obviously it's weighted with how much money you put in and what percent they go up to your overall increase. Now, some of that is still on paper, some of that is confirmed. And obviously when you look at the interest rate you get in the bank, yeah, it's less than 1%. Of course, that is a seismic return. It even beats a lifetime ISA return, which I'm fairly proud of because 20% is quite a good return for a lifetime ISA. So my credibility on these rules is previous positive results and some university knowledge. Not that credible. But you guys want to know my top 5 investment rules, so I figured why not bring out this quick video. So the first of my top 5 investment rules would be only buy companies that you're willing to buy more of if once you buy them for the first time, their share price decreases massively. So for example, let's say I bought Tesla at $1,000, they went down to $500. I'd want to start with be confident enough with the stock that no matter what happens to their share price, I would always want to lower my average and buy more of them. Because if I'm not confident truly in the stock to the point where I'd want to buy more of them if they went down, then fundamentally, is it really a good investment in the first place? So I always ask myself that question before I invest to ensure that what I'm doing is a good decision. My second rule is I sit down and I think, is this company's aims, morals, and direction the same direction as the future of the world? So I might look at, let's say, are they focused on clean energy, becoming, automized, robotics and automation, and really kind of looking at their sector in relation to where the world is going. Because clean energy in the future is a big thing, robotics and automation in the future is going to be a big thing, I think. Motion technology is going to be a huge thing. Electric cars, like all of that sort of sector is where the world seems to be going right now. So a lot of the time I ask myself, is this company going to capitalize on that move towards them things, or as a result of the world moving towards them things, is the company going to collapse? And obviously you want to be investing in companies that are going to work well with where the world is going in the future, because companies' share prices are based on future expectations. So really looking at, does the company fit in with the future, is the second rule. My third rule, reading the room. Now, I think it's always great to stay in your local microclimate and look at what everyone around you is doing. Is everybody spending loads of money on Warzone? Is everybody not playing Warzone? Is everybody eating out or too scared to go out? Social media creating this new trend where this becomes popular. I think just having a rough idea of what the world around you is doing can actually be a very useful tool to helping you make a good investment decision. That's quite a broad one and I'm going to leave it there, but I think just think about that, and that is something that I do a lot when I make a decision on investing. The fourth rule is roughly related to the one before, but it's also about thinking, and economics truly taught me how to think in a way that is different to the average Joe as such. And I think as an investor, being able to think better than the average person will truly put you in good stead for making a good return on an investment. And what I mean by this is you want to invest before the average person thinks to invest, and you want to sell before the average person thinks to sell, it's obviously much easier said than done, and it does kind of relate to momentum trading a tiny bit. But just thinking about, are there any opportunities you can catch on and latch onto before it becomes mainstream? And sometimes I feel like just taking a sit back, being in your own bubble, studying economics helps with this a lot, and thinking about fundamentally what's going to happen to these stocks as a result of things. I mean, an easy example would be EasyJet. I sold them at £12 before the crash. They went down from 15 to 12 because of that fundamental thinking and taking a step back. And then I bought back in at like £4, they went up to £9, and I looked again and I said, wait, they were valued at £8 this time last year without a pandemic, I've got to sell them. And then they went down again. So really beating and reading the room, sticking to your gut, and trying to be a tiny bit ahead of the average person will hopefully help you make a great return. And my final rule is, what does Zacks say? Zacks.com are not sponsored, but I think they're a great tool for aiding your investment decision. You can search up any American stock really on there and find out what their rank is between 1 and 5. That rank takes into account, broker forecast, value, momentum, future growth. And if it's a value rank 1, 2, it's recommended as buy. If it's a 5, then I would stay away from that stock. So really it's just an additional tool that I use when I'm investing, and I think it really does help. So in a nutshell, they are my 5 basic investment rules for you guys, for beginners, for anybody really. They're ones that I follow today even though I'm not a beginner, and they have proven to help me a lot with being successful and getting a positive return in the past. Now, if you are new to investing and you do want to start, click the link in the description down below to my Trading 212. You can sign up to Trading 212 using my link, and that means we both get a free share worth up to £100. And Trading 212 is the recommended broker in my opinion for beginners, because basically they don't charge commission. So when you're starting out investing small amounts, if you just wanted to invest £10, you could do that. They wouldn't charge you, £5 commission, making your investment pointless or just making you lose money. Some other brokers like Halifax do that. So Trading 212 will be linked in the description down below. It's a bit of free money once you sign up and deposit £1. And if you leave a like right now, I'll tell you my most recent purchase, about 2% allocation on my portfolio. If you leave a like, all right, you've done it. Thank you very much. I recently bought Hologic. There's going to be a video on my second channel, Economics Changed Me, all about why I bought that company. But check them out and check out that video very soon. I think they could be a decent bet, no guarantee. So thank you for watching, subscribe, and I'll catch you again soon.
All up in my head, that's how I behave. Passing up the same, waking up the same. All up in my head, that's just how I behave.